Let's understand why banks conduct stock audit of their borrowers who have availed cash credit facility at times. Let's take the case of a company called A Limited. This company has availed cash credit facility of 5 crore. This entire 5 crore was sanctioned and it is also drawn. To support this cash credit facility, they are submitting a stock statement, and this stock statement claimed this company had inventory plus receivables of 8.5 crore. But despite having this much of current assets, this company liquidity position was always worse. The conduct of the account was irregular. The LCs were devolving. They face frequent check bounces. So the bank was not happy with the way in which the account is conducted. So this bank ordered for a stock audit. A chartered accountant firm was appointed for conducting the audit. As per the company, they had inventory of 5 crore, debtors of 3.5 crore. So total 8.5 crore. So this is the position as per company. But the audit firm conducted the audit and they found this firm has inventory of only 3 crore and debtors is only 1 crore. And even out of this 3 crore of inventory, there was obsolete stock and it is 0.5 crore. Some of the debtors are doubtful and that is 0.1 crore. And they also notice some of the debtors are greater than 6 months and that is 0.2 crore. It means the net position is only 2.5 crore of inventory and deducting 0.1 and 0.2, only 0.7 crore of debtors. Now applying the margin, which is at the rate of 25% on 2.5 crore, works out to 0.625 crore, and on debtors it is 40%, that works out to 0.28 crore. So the advance value is only 1.875 crore against the inventory and only 0.42 crore against debtors. Total works out to 2.295 crore. They had a sanction limit of 5 crore. Advance value is only 2.295 crore. So in this, whichever is lower, that will be considered as drawing power. So the actual DP is only 2.295 crore, whereas outstanding is 5 crore. It means there is an excess drawings. Excess drawings amounted to 2.705 crore. And this has come out only because of the stock audit. So look how the stock audit is helping the bank to identify where things went wrong. Stock audit, as I said, it will be conducted by empaneled chartered accountant firm. They will do physical verification. They will take physical count. They will compare the position with the stock statement submitted by the borrower, and this will help in finding the variance or discrepancy. In case of large loans and advances, especially where the cash credit is given, conducting stock audit at regular intervals will inculcate discipline. It will help the bank to identify potential NPS so that they can take corrective action at the earliest. And here we go. Credit and Financial Analysis Mastery Course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.